everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, November 18th. We got a couple economic news releases to go over today, and we'll start off with the Producer Price Index, also known as the PPI. This is the gauge for inflation on the wholesale inventory. So this has more of a mild impact on the overall market, primarily because if prices go up on the wholesale, it doesn't always get passed on to the consumer, and that's what we kind of gauge where our biggest inflationary numbers are on the consumer, like the CPI and the PCE index. So let's go back to chart here. We had October's reading. So September we had a negative, so pulled back in September at negative 0.1%, and the forecast was supposed to pull back again, and it actually went up 0.2%. So it went up a little bit more than we expected, but if you look at the overall year-to-year numbers where we're at about 1.5% on the headline numbers. Now, if you strip out the food and energy, the core, it would actually be closer to 0.1%, and year over year that's about 1.6%. So still under the 2% where we like to keep inflation. The Fed likes to keep inflation underneath 2%. They like inflation, but not too much. So once we start going above 2, that's when you start seeing rates climb. We also got the home builders index. This is the confidence level where the home builders are. So we see improvement here. So we had a 54 back in October. The 56 was the forecast, and it came in exceedingly. So this is the best we've seen in quite some time here, in quite a few, several years here, but at least good 4 years numbers here. So decent numbers. Right now the stock market's up, so they like the numbers that we've seen there, but there's also a couple other snaps. We got the Japanese Prime Minister is calling for a snap election. Basically, as if you've been paying attention to our little broadcast here, they had some numbers that came in. Basically, GDP came in short and kind of putting them into recession level. So the Prime Minister did announce that they're going to hold off for 18 months on the sales tax hike. He's also calling a snap election, which basically means that he's trying to move the election up faster for December, and have basically it has to do with their lower parliament, and need to try to get some type of resolution and trying to figure out, obviously, get their economy moving, since they've been kind of a decade plus long recession, so to speak. A very slow economy there. Also, some good news came out in Germany, where their consumer sentiment, which is kind of a survey passed around where people are feeling a little bit better about where things are moving. They showed some improvement. So those are usually kind of high impact, kind of like our consumer sentiment or confidence. Those surveys shows well, because typically, if people are feeling better, that perception becomes reality. And those are so those are good news coming out of Europe as well. Let's go and take a look at the bond market. So we're currently at about where we left off yesterday. We're at 103.14 level right now. We did have some spikes earlier in the day as well, and then came back a little bit. But so far from where we left off yesterday, we are basically at the same level. So there's no change in the interest rates from where we left off yesterday. We did jump up a little bit. Where we left off yesterday, we were about 103.9, and we ended up at 103.14. So nice little moves right there. This could potentially, with the improvement in the stock market, this could pull back, because they do typically, we could see some worsening here. But tomorrow's going to be the big day. We get the notes from the FOMC, so we'll get kind of more, if there's any surprises or any, get more of a feel of the back end of where the Fed was thinking during the last meeting. So that will be a big impact day tomorrow. So be careful tomorrow where things are at and how that could potentially be interpreted. All right, folks, you guys have a wonderful day. Thanks so much for watching, and we'll see you guys tomorrow.